Federal Reserve kicks off its two-day policy meeting tomorrow. Much of the focus could be on the dots. Joining us right now is Roger Ferguson. He is former Fed Vice Chairman and a CNBC contributor. And Roger, there was a very interesting piece yesterday from Nick Timiraos in the Wall Street Journal about whether the Fed is hitting the brakes hard enough, whether they have hit the brakes hard enough. And it started out just on the assumption that, look, things are really good right now for home builders and in a lot of other areas, and that's not what you would have anticipated if the Fed had really tightened things to the extent some people complain about. Where do you think we stand right now? Is this a situation where you want to wait and see what comes next? Is this a situation where you think there's a clear path for the Fed?
I think it's more of a wait and see, frankly. The last two inflation reports were a little bit disappointing. The economy is doing well, which is a good thing, but inflation appears perhaps to be stuck somewhat above the 2%. So I think they should be in a wait-and-see mode, and I think they're going to continue to signal no rush to cut, which might be a little disappointing to the market.
Right. And for a market that was the last thing they heard from Chairman Powell was that we're getting towards cuts sooner rather than later. That was in his last testimony when he spoke before the Senate. What was it, a week or two ago? You think the last couple of reads we got on CPI and PPI may have changed that trajectory?
I think it's slowed things down just a little bit. You know, it's ironic. The market was, getting itself comfortable with only 3 cuts, perhaps beginning in June. And this set of dots may indicate maybe fewer cuts, maybe a little bit more delayed. And so, yeah, I do think that incoming data is probably going to weigh on some of the policymakers who are a little uncertain. And I think right now the data are not supporting an earlier start, probably supporting somewhat later start.
It seems to me like the Treasury market has kind of divined that message that you're talking about. I mean, you're looking at the 10-year at 4.3, and the 10-year was at 4.05 just maybe a month ago, not even. So it feels like the Treasury market has kind of figured that out. I'm not convinced that the stock market has.
I share your point of view, and it's not surprising, right? The Treasury market is really geared very much to what the Fed is saying around interest rates, particularly the 2-year and the 10-year. The equity markets, geared to lots of things, hopes on earnings, for example, and in particular, the indices are heavily geared towards a relatively small number of relatively hot stocks. So I think we're getting 2 very different reads, and I actually think, as is often the case, maybe the fixed income market is much more attuned to where interest rates are likely to go, and they're signaling perhaps a little higher for a little longer than maybe many had hoped earlier.
So if the markets were kind of baking in before this last couple of data points, we're baking in a June rate cut, and I've heard some economists and others who have moved that to July. Where are you thinking? Is July sound reasonable, or would you just more blanketly say the second half of the year?
I would certainly be much more comfortable saying second half of the year. There's a lot of data to come between now and June and July. And so I think second half of the year seems more likely. But certainly, I'm taking my expectation down to probably more likely 2 cuts. I think they'd like to start earlier for a variety of reasons, but I think they do want to feel pretty confident that the 2% or something close to the 2% is in train. So count me definitely second half of the year. I'd say July is a possibility. I'm much more certain that it's probably more likely 2 cuts as opposed to the 3 that I was thinking a little while ago.
So when you say there's a lot of things, a variety of reasons for why they'd like to start sooner, is the presidential election one of them?
Frankly, I think so. They are not interested in, getting heavily involved in politics. But I think given the tone of this election, it might be nice for them. They might want to get started and get out of the way so that, they're not, and their moves from meeting to meeting are not being discussed too actively in the political realm. But at the end of the day, I have a high degree of confidence they're going to be, 99% focused, if not 100% focused on the incoming data. But, they're only human beings, and I suspect some sense of if we can get this started sooner, it would be a good sign that inflation is under control, and I think that's what they'd like to see.
That all makes a lot of sense. and I believe it coming from you 100%, Roger. What will you be watching this week with the Fed meeting? What will you be listening for?
Like everybody else, I'll first want to look at the dots. I think there's no expectation that they're actually going to, change policy itself. And then, trying to parse, unfortunately, unusually closely, Chair Powell's words during the press conference. He's going to be walking a fine line because, most of the indications are that they would like to cut, but he also doesn't want to get things out of control and have the market bake in more cuts than they're currently expecting. And it, I think, is, as we just talked about, a pretty unusual situation with a great deal of uncertainty. And so trying to parse carefully without appearing to be more certain will be, I think, part of what he's going to attempt to do.
But basically, they don't want to start rate cuts and then have to stop or reverse. You think that's maybe the biggest thing that's going to be determining this?
That's one of the most important things. As we've talked many times, there's some concern based on history about doing what's called a stop-start. Once you get going in one direction, to suddenly pivot, throws many people off, including the market itself. And so I think they want to have, as they've been saying, a higher degree of confidence that inflation is moving closer and closer to the 2% target. I think the little uncertainty about how close they are. Earlier on, they thought they were closer, perhaps. Now I think maybe they're a little further from that certainty. Consequently, wanting to deliver a message of no rush to cut.